Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 index. We'll start with the monthly markets, very extended, as we can see, very extended from the top end of the cloud. So there's significant reversal risk, whether it's going to happen over the next couple of weeks or Q1 or Q2 of next year. That remains uncertain. However, this particular candle is quite negative. It's a very bearish type candle. So we'll see how this month's ending. As long as the market can rebound and remove that type negative candle and find support, that would be good. But otherwise, that is a early warning signal that the cracks are starting to appear in this extended market. A beautiful conspicuous consumption bubble. Looking at the weekly chart, we can see the market had a bit of a brief correction last week. Key levels to watch out for on the weekly is this standard line of the cloud as well as the turning line of the cloud. These are two key support levels to watch out for. The first level of support will be this turning line, 4498, and as well as the old highs there. So these are the downside risk targets if the current correction continues. These levels 4535, 4498, and 4454. These are these three levels. The old high there, the turning line, and the standard line of the cloud. And this coincides very well with the front end cloud chart support levels. So these are the downside risk levels in the current rally. Quite a lot of divergence between the MACD indicator and the market. Market has been trending higher, and there's been huge divergence with the MACD. So it'll be interesting to see if this correction is going to continue back down to these key levels. Looking at the daily, we can see the market sliced right through the standard line of the cloud. That's quite bearish. These old highs here is a significant support level. Watching for the front end of the cloud here to look for support, potential short-term rebound. If support holds, the front cloud support levels that's a significant zone there. The other level to watch out for is this level there. So the market is expecting to rebound from 4600 back down to this level now. Will be interesting to see if the turning line will now act as resistance. So that's the first target there. And then the front end of the cloud is the other level to watch out for. So that can also be a key resistance level. So these are the two upside targets for a technical retracement of this move. But the first support will be 4633. And then 4664 if the rebound lasts. If we get a reversal there, then we're going to retest 46005, 4568, these levels, and then this 4535 zone. Significant downside risk to the front end of the cloud. Yeah, that's a 4498 is a significant line in the sand. If prices dips below this level, then we're going from bullish to bearish outlook. But so far, price action is still above the cloud, so that remains bullish with downside risk to these key support targets. Turning to the 4-hour chart, gives a little bit more feel what's happening intraday. Slice through the top end of the cloud. That's quite bearish, but we're still above the bottom end of the cloud. Watch out for these key support levels. This old cluster of support here at 4568. If we get a technical rebound, we need to break past this top end cloud chart resistance, because that's now a new cloud chart resistance on the 4-hour chart. Will be interesting to see if the market's going to push back through that level, and then the rally should still be okay on the 4-hour basis. But it would appear that we're starting to get a sell signal on the 4-hour from an Ichimoku cloud chart perspective. Massive divergence between the price action and the MACD as well. We've had a sell signal mid-November already. Downside risk to the bottom end cloud chart support levels, these cluster of support levels down here, and as long as we stay above the bottom end of the line here, the rally should be okay. But there is still significant downside risk on the 4-hour chart to go and test these support levels on the 4-hour chart. But back to the daily, let's go and recap there quickly. Looking for a technical rebound back to the standard line of the cloud for 633. And then if the weakness continues, we'll retest this 4600 front cloud, and that for 4568, that front cloud chart level with downside risk to 4498. So these are the downside risk targets if the current correction continues. Until next time, happy cloud chart trading. Bye for now.